Alright, hello guys, and glad to have you on board again today, even though I will be very honest, today is not a good day for me. I am not pleasant waking up today and seeing the cryptocurrency free falling because of absolutely no apparent reasons to do such a thing, but the reality is always the same. Remember that when you have money in the markets, what matters more than anything else will always be the price. Though I would today draw that very important line in between speculation and investment due to the nature of those two. The first one being associated with margin, which means you're going to immobilize a certain portion of your capital while still having a bigger than this margin exposition into the market. And in that perspective, this is how you can have diversified risks while still not necessarily spending $1 for $1 equivalent of market exposition. Though that's the basis of speculation, using diversified risk taking to expose the same amount of capital into a bigger than expected market global exposure. Of course, these comes with stop losses, which means you therefore have limited risk associated with each scenario, which means stop losses on each one of them. All right, that's the basic A101 for diversified investments, diversified speculation, okay? You're going to have margin exposition to these trades, and you're going to make sure you have a large number of these trades instead of taking just one big exposition, okay? So on that front, that's how you durably and efficiently use margin into speculative trading. On the other hand, well, like I've always said, if you're just margining your account to get more of the tokens you cherish too much, well, that's the equivalent 101 of being an endless loser in the market, because times have proven time and time again that this was a lose and lose game only. There are very few lucky folks who can end up making a shitload of money using this type of margin, but to be honest, it really is luck more than anything else, and the more you will reproduce that experience over time, the likelier for you it will end up losing it all, and that has been mathematically proven times and times again. All right, so that aside, as a quick introduction, today I wanted to just state that one, okay? Really, really important. My personal portfolio exposition, and for transparency purposes, I shared it again today on Twitter, is this, okay? You've got my equity curve of my overall investments. For security purposes, you don't have the y-axis spread it out there, but you have the general grand scheme of things. You just would like to see for how long I've been in there, what is my general equity curve looking like, and that's all there is to know, okay? You also have the relative weighting of those assets in my portfolio, and normally if you've been following it for quite some time, you're not really surprised with that. It's quite a familiar investment stuff, okay? Though that being said, there are some investment biases into this thing, okay? All right, sorry. So there are some investment choices in here, which means some assets are overweighted, some other are underweighted, and we'll get through this as the video goes on, okay? But remember one thing, this is my investment portfolio. I don't do trading with that. Though let's put things very, very straightforward now. What happened throughout the latest 48 hours or so has been clear, straight invalidation for all the other speculative trades that I had, which means those associated with the aforementioned margin trades, okay? So these, just like I do for every margin trade, were no more than 2% of my portfolio per trade. The biggest trade, of course, has always been, and I clearly stated it multiple times, Atom, in which I had quite a lot of confidence. Well, this has been a straightforward 2% loss on my crypto portfolio because of this. I also had other speculative margin trades on Theta for 0.5%. This one has been straightforward invalid as well, meaning stop loss taken down. All right, I still have two ongoing, one on Ethereum and one on Chainlink. Chainlink is pretty much rather closer to invalidation than ever, so we'll see all about that one. Ethereum is far from being invalidated so far. Future will tell if that's the only one who's going to survive, or if it's going to go by the same path of the others. Okay. We'll talk about that, but that's the stage we're in. Though, of course, like I stated earlier, psychologically speaking, I don't like these moments. I mean, this is generally Invalidation is never going to be pleasant, even for experienced traders, and I hope you guys will understand that. All right. So first message in here, you have to understand that the job that I do in here is a community job. It's absolutely charity job in here as a volunteer. I'm not paid for this. I don't take any dollars for my YouTube views. I don't take any dollars elsewhere actually from any of the community job that I do in here. I've been doing this for years in a row with hell of a track record out there to just say, well, yes, of course, sometimes I get it wrong and that's not a big deal. But the problem is, well, some people generally tend to forget about the fact that, well, first of all, do it. Before you even try to criticize someone who's publicly sharing on internet for free, okay? Hiding yourself behind that nasty computer of yours, just try to remember one time that I do as well things. I do get right, wrong, whatever, but I do share for free. I get nothing from doing this but hatred. And that's very, very dangerous, of course, because, well, of course, there is the silent majority who just says nothing, or just a little once in a while just says, yeah, thank you, Phil, for everything. Okay, I like that. But the thing is that, of course, the haters just tend to show up on the worst possible time. So like I said, it's not a pleasant time for me waking up and seeing some speculative trades being winded out. Moreover, on some assets in which I have very, very deep implication, not just on money level. Remember that Cosmos is something that I very particularly cherish on top of the overweighting that I have on the investment. And I'll go through the whole history that I have with Cosmos later in that video. All right, so that's really that thing. First of all, I would like to say fuck you to the same old guys who will show up on the socials and say, hey, yeah, he was wrong. Look at that. Wait, okay, congratulations. I would like to see how you guys are wrong from time to time. And, well, the difference is that I wouldn't just throw on your faces these things, okay? So, once again, being wrong is part of the game. I've done it multiple times in a row. I've been wrong before. I will be wrong in the future as well. There is also a track record to show that, yeah, I might have struck some things right as well. Okay, so that aside, just quick message for the haters. You can try knocking me down. I'm stronger than that. All right, so we'll see all about that in the future. Now let's go back to the investment thesis. So what happened through the latest 48 hours is just entirely concentrated on one particular effect, and I've been actually warning you about that multiple times in the recent weekly reviews, saying volatility is down the corner, be ready folks, it could hit both ways. So turns out, well, I wish it would have hit it the right way to the upside, and I had trading exposition to that potential scenario, by the way, and this is what's been invalidated because, yeah, we've decided to go for downside volatility and with hell of a rocking chair. So the thing is that that's the stage we're in, thanks to Gary Gensler on its private vendetta against crypto and the whole crypto cabal, which we've mentioned multiple times. It's very easy. I mean, these guys are not even hiding anymore. It's really the way it is. So there are lots of dissenting voices inside the SEC who entirely disagree with the way of enforcing like that and publicly pushing on crypto just like Mr. Gensler is doing on its own. So bear that one in mind. There is a lot of dissent inside the SEC as well. But on top of it, this guy is also supported by very powerful forces. We've mentioned that a lot in the past. These guys don't hide. I mean, this is really the World Economic Forum type of stuff. Same old FATF, BIS and stuff like that. We're very, very kind of pro-USA aligned type of unelected governance structures. Well, they don't govern, they advise, but that's pretty much the same thing. So call them power structures that are very, very US aligned, who are, I mean, more or less officially now doing anything they can to support the dollar. So they view and fear cryptocurrencies as competitors. There's one that they can't destroy, which is Bitcoin, because it's reached out the kind of sufficient velocity to escape the Earth's gravity. There are some other tokens who are still in a potentially vulnerable state, and we'll mention that state we're in, because that's exactly what I think has happened throughout the latest 48 hours. If I could explain it in a more understandable fashion, I would like to say that this is just basically Gary Gensler putting a lot, like really, really, really a lot more gravity into those forces that were trying to go out and find the sufficient velocity as well. Okay, so Bitcoin did it years ago. It's sufficiently decentralized and there is no central head to go by and abide by to send their messages. So this is the problem. They can't fight Bitcoin. They wish they could, but they can't. So that's really the way it's gone. though they will try to do on the other ones. I think Ethereum has sufficient velocity as well, even though they probably will try anyway. They probably will fail on that one. But they were still the possibility to look for the other ones, and particularly the Atom token, which I think is sufficiently decentralized to be called a commodity, but yeah, for whatever reason. And I strongly invite you to have a look at the SEC's complaint, by the way. You would see that, well, damn it, I mean, I don't know if it's even legal to defend such a thing. I mean, I hardly imagine a court will receive a complaint from the SEC against Atom based on what's been shared on the Binance complaint, because that's really full of shit. There's absolutely no legal grounds for a complaint to be really receivable out there, but that's a topic for another day, okay? So the reality is that the prices have spoken, and just like I said in the introduction, price is the only thing that can make the difference in an account, more or less, more importantly when there are margin trades. So all my margin trades have been stopped. There is no margin on the table. The only thing that we are going to be discussing today is the investment part of my portfolio. Because, of course, when you get such a quick invalidation, in 48 hours getting 20-30% drawdowns on assets means you're under a catalyst. The question is, of course, what that catalyst is. We've answered that question now. That's the crypto cabal who's been going absolute bonkers against cryptos. We were expecting volatility, and they've been taking advantage of that situation. So that's where we're in. We've explained all those things, how they would coordinate attack. I mean, there's the choke point part of things, which means they've cut it out from the financial system. So running an attack over the weekend was just absolute perfect timing. Though they've cut the slack on crypto from the financial system, which means we have very little access to cash over weekends. And they just throw that hell on crypto with that complaint, of course, before the weekend showed up. So that's really the way it was. Of course, very brutally, the market has responded to this. The early stages weren't that bad, but it really took a very dramatic shift throughout the overnight session. So now, as you can see, all the tokens are 20% down. I mean, liquidations, cascading liquidations once again have happened. And the market is once again in a bloodbath, waiting for investors to show up. Investors that just can't show up because they can't, because of the cut slack from the money market. So this is really the stage we're in. The market is under high pressure because there is a shift in between supply and demand. These guys are fucked supply with a catalyst. Is it a legitimate catalyst or not? Like we stated, it is a matter which you shouldn't pay too much attention to. We'll talk about that later when it comes to investment thesis. But for speculative purposes, well, you took a bias. If you got stopped, just like I was, well, I mean, just take it. Normally, you should survive. If you have been doing your due diligence preparations for speculation, well, you should take a hit. I've taken a hit. Yeah, that's certainly not pleasant, but you should be far from being dead. All right? So that's the thing. All right. Now, when it comes to the investment thesis, it's always time series based, which means you can't just invest in a stupid HODL or DCA way, which is basically, yeah, I don't give a fuck, I just buy every month and I'll never sell. Well, okay, that might not be the smartest way to do this, unless you do it on some specific assets. To me, the DCA is the only thing that can be done on one asset, which is Bitcoin. Because to me, the time series on Bitcoin is much, much larger than the other. So on that sense, yeah, I mean, when we're in bear market environment, just buy over month with the money you're willing to lose, which is basically the money you don't need. And I would certainly advise not to do it with the whole amount that you could do. I mean, basically, the money you don't need on a month-to-month basis is what we call spare money. This is the money you could invest. So putting all your potential capacity for investment into Bitcoin, aka 100% of your investment portfolio is into Bitcoin, I would say, I would argue people discussing this, but on a personal level in here, and that's just my judgment in here, I would say, well, you'd rather like to go for a shrink because there's probably a problem in the way you allocate this capital. Because mostly every professional investor will tell you that an investment basis on a single asset is not an investment bias. It's not an investment basis. That's a bias. That means you probably are hiding some shadows or skeletons in the closet of your own personal psyche to just try justifying that you only need this asset to solve it up. Like I've always said, these are very well-known psychological biases, but I'm not going to go for a 1-hour course on this. TLDR in here is that, well, if you are full Bitcoin, let me just quickly describe why you are doing it, or at least the major reason probably backing this claim is that you're thinking everything is going to collapse. We know this theory for a long time. I mean, the theories of collapsology have been known for years as well. They're very well documented to say that, well, yeah, of course, may happen, but it hasn't happened so far, and we're still there. So the thing is that, well, it's generally kind of a fantasy of everything crumbling and exploding like the domino effect that people are very familiar with. You're actually expecting a reasonable probability of dozens of dominoes to fall one by one in a specific sequence order, and that this will inevitably happen. So, to be honest, the probability of this, you know, are very limited and narrow. Therefore, exposing 100% capital to this, to me, is the revelation of a bias. That means, well, I don't know what you're doing, but you're probably hiding something to yourself. And the rational expression of this is through your portfolio's 100% exposition into Bitcoin. You're actively speculating on the fact that everything will collapse, and it will do it now. Because otherwise, well, the most rational approach for Bitcoin is to say, yes, we're in transformational times. We've seen that back then. The financial framework is changing and evolving toward more decentralized versions of stuff, and that Bitcoin is probably going to be, decade from now, an absolutely legitimate store of value, potentially even the forthcoming world reserve currency. So in that sense, if you do on a more rational approach, you would understand that this thesis is far from being just irrational. It's actually very, very probable, but it will take much longer periods of time for you to happen. So in that sense, this is a very long-term Serie investments thesis, which means you're speculating over something. You're kind of buying an insurance over the transition of the world around Bitcoin 10 to 12 years from now. And in that sense, well, this is a time-based, very long Serie. And here, dollar cost averaging is a very smart way to do things. Define bear market territory. You've got all of the on-chain analysis to do such a thing, to confirm that we were, and still potentially eventually are, but at least we were latest month in a oversold territory, undervalued territory, just like we were in 2019. Though these are the areas in which, well, of course, dollar cost average in Bitcoin makes a hell of a lot of sense. Now, for every other type of investment thesis, okay, I would tend to say, well, how much Bitcoin do you need, though? Because going for DCA is a strategy that must have a beginning, an end, and a repetition cycle. I mean, basically, anytime you reach the underlying undervalued system, you're going to start DCA. Now, the question is, when do you stop? Okay, when is your money much more efficiently invested elsewhere? Okay, accounting for the fact that you're going to get, for example, $100 available at the end of each month for these investment theses. There are moments in which, yes, doing it all in Bitcoin makes sense, specifically in those bear market environments, but on bull market environments, well, growth is going to be the way you will make that money worth it. So that's really the way it is. So when do you start DCA? When do you end it? You end it when the market will overperform on some other asset class, more profound speaking type of investments, moments in which growth will provide more rewards for the same amount of risk taken. So that's really the way it is. Though my investment thesis has always been that one, that to say that, yes, we've reached that undervalued territory. So I did load a bit more Bitcoin out of what I had back then. I think reasonably, I would say I have bought somewhere like 30% more Bitcoin. So if I had a 1 unit of Bitcoin back then, I would have been having 1.3 unit of Bitcoin in here, okay, out of this bear market. And I started, I think, accumulating Bitcoin. I think my first buy was, if my memory is right, I think I gave you the numbers. I think that was 37K, 27 and 14K and 19K. I think I've made 3 buys of Bitcoin as we gone lower in here. Though I've done it all, I'm not going to buy any more Bitcoin now because, as you've seen, my portfolio currently holds 15% Bitcoin. And to me, that's more than enough. I don't need more of this. I actually need less of it. But I'm never going to sell my Bitcoin. Like I said, this is kind of a DCA to me. At each and every cycle, I buy a bit more eventually, if I need to get more, which means I'll never exceed 15% Bitcoin on my portfolio, at least not now, at the current stage in which the market is. Eventually, at further stages, I will consider more Bitcoin, but that will be when and only when I will anticipate that potential collapse, meaning that the fiat system or other cryptocurrencies will be underperforming relative to Bitcoin, allowing me therefore to have more of it. But until then, well, I'm not one of those who speculate on these collapsing theories and stuff like that. All right. Until then, I'm here to be as a capital allocator and just to try finding the best suitable vehicle for each and every excessive amount of money that I could gather out of a monthly basis. All right. Though most of the time I tend to accumulate and then invest. So that's really the way it is. Most of my investments have been made in 2019. You know that. Back then I've been choosing the regular ones like the Ethereum Cardanos. I think I had Ripple as well. I think back then that was Stellar as well in my portfolio. Then I've learned about Atom back in the late 2020 and I got into this thing. Okay, so and now here we are, the second bear market, so kind of another cycle, and I shifted my investment thesis to what I've chosen to be Ethereum, Atom, Bitcoin, Link, Monero, and Thesis. The theories behind them are very well known already, but I would like to state them very quickly once again. My thesis on Bitcoin is exactly the one that I've been explaining. The Bitcoins that I have will never be sold. They're on a separate ledger which is stored at the bank. I'm not buying, selling Bitcoin. I'm just accumulating it. That's an insurance, and 15% is the maximum I'll ever consider having, which means right now the situation we're in, if things were to go much lower, Ethereum included, that would probably push my portfolio over 15% Bitcoin, okay? We're currently at the limit, which means now I'm going to eventually start considering selling my Bitcoin for something else. It will stay into the crypto portfolio, but I'll eventually start to consider switching if it goes further, all right? In the current stage, we're at the level in which, of course, I let Bitcoin live. If it goes 16%, I'm going to go drastically changing things. But if Bitcoin were to severely overperform the rest of my portfolio, I will consider switching some of it to pull it right back down to 15%, all right? So you kind of have the reasons. I don't want to have less than 5% Bitcoin as well, which means if Bitcoin falls below 5% of my overall weighting, I'm going to start switching things back into Bitcoin. All right? So you kind of have my basic thesis, 5 to 15% of Bitcoin is what I have. So I generally also tend to say, well, depending on the cases, DCA and stuff like that, or HODL's theories could make sense, but they also have to be rationally weighted, okay? So I'd like to briefly state why. So if you calculate very quickly, and if you take some models in here, Bitcoin, there will be 21 million of them. Most of them, quite a lot of them have been lost already and probably never will be recovered. So the thing is that this is of a long-term deflationary supply. Some estimates have been saying 17 million of them will eventually be available in the end. And there's still uncertainty on whether we'll go for a tail emission in the end or just terminate every emission on blocks. We'll see all about that. But anyhow and anyway, let's assume it's 17 million. You use a typical Pareto law distribution, which means 80% of the supply is held by 20% of hands. So this is kind of a net asymmetric distribution in the system. I mean, I'm not going to do an entire course on Pareto laws, but they are very well applicable into the system. Though if you run those math in here, I'm not going to do it but I mean, just rough estimate in here, and you would see that this is pretty much closer to this. Well, if you divide that by the population in circulation today, you would require more than 0.01 Bitcoin to be above average. All right, so that's really the way it is, kind of having an average wealth in a full Bitcoin world tomorrow. Though that's the thesis of everything is going to be destroyed, Bitcoin is going to take it over, no more dollars, euros, whatever, just Bitcoin, okay? That's really maxi vision of stuff. All the world's value is in Bitcoin. Well, you would require 0.01 Bitcoin per person to be above average. That means living an above average life. Well, like I said, this is not that big. So if you want to DCA your way in to get 0.01 Bitcoin per person in your surroundings, well, just do it. Anything more than that is a bonus, which means you're not just willing to be on average, you want to be above average, all right? So the question is, how far above the average do you want to be? Do you want to be in the top 1%? Do you want to be in a top 5%, top 10%? Though that's really the way it is. The higher you want to climb yourself into that stairwell, the higher you're actually willing to get control, okay? So try once again to rationalize these thoughts. I think the higher you want to climb yourself into that ladder, probably the more you would benefit from having a shrink and actually discussing about those problems. You're willing too much into control, and And this is probably the core issues causing these willingness to get more and more and more, all right? So try to be rational on that front. The higher you want to be on that ladder, you probably are willing to get too much control over the society, which could be signs of sociopathy and other things like that. So you really want, on very extreme cases, but at least that means you probably have some psychological problem you really want to be discussing with a shrink rather than having a too much portfolio exposition in Bitcoin. My assumption, I know some people will criticize me for saying it, but I just think that's the most rational explanation. Okay, anyway, that aside, so if you diversify your portfolio, well, the question is, what else do you buy? All right, if you have more money than the basic requirements of Bitcoin aforementioned, okay? Well, like I said, I think the normal rational stance would be between 5 and 15% of Bitcoin. And if you have extra cash to allocate, while still having the relative minimum insurance for Bitcoin aforementioned, well, the rest is, well, you have to pick and choose. That means you're going to have to find things that will eventually overperform Bitcoin over time. So you're going to look for growth. You're going to look for more productive assets. Remember, Bitcoin is a store of value. Therefore, what we want out of it is nothing but just being as useless as possible. And this was the assumption based on that model. Remember that we're not revolutionizing by just throwing the table and replacing everything. We're actually mimicking and hybridizing with the existing structures, which means, yeah, somehow crypto isn't just doing random. It's following the guidelines that the current financial system has structured itself, and it will over time hybridize and merge with the existing financial system more likely than just throwing it all and replacing it. So in that sense, Bitcoin will be the store of value, and what we want out of it is very few transactions. We want to have predictable scarcity and limited economic utility. That's exactly what we want out of Bitcoin. We just don't want it to have full smart contract capabilities and growth and stuff like that. That's why Ethereum came to exist. Though the world we're in now, which this exact world that is actually being put at stake with these recent SEC claims is that, well, this is all security, and you're unregistered security, you're going to have to come and complain, and okay, and comply. Well, that's the world we live in. I mean, the market right now is being absolutely shattered because of this. So I would like to say, out of a time series-based investment, first of all, you need to have time series investment. So you need, if you're dollar cost averaging or just investing, hauling, whatever, despite Bitcoin, every other investment you have is a limited time offer. That means, in the end, sooner or later, this investment will underperform Bitcoin, and you're going to have to either go back to Bitcoin or fiat currency or whatever. But this is a limited time offer. It can't be just, yeah, okay, I'm buying and holding till I die. That doesn't make sense, okay? So you're going to have cyclical-based investment. That's what I tend to call time series investment. That's how you do investment. And I'm going to bring up that thing, which normally by that time you're very, very familiar with. This is how I do my time series-based investments thesis, following the Armstrong cycle stuff. Though, of course, this guy isn't a genius, he doesn't know the future, but I kind of like to have a framework, a model to work with rather than just going pure chaos, okay? So the model that I follow is that we could currently be in a positive economic confidence model, normally favorable for financial market in general. This will terminate in first third of 2024, and this would be named as to be the commodity boom. That's the reason why I have overweighted all the commodities in my personal portfolio exposition. That's the reason why I have huge expositions in silver, on oil, and stuff like that. These are the assets that I chase more than the others, and I'm willing to overweight in the portfolio. I've always made that stance to me. Bitcoin is a commodity. It's already been claimed as being such. The question now is, are the others as well? Because my assumption has always been that I am specifically targeting assets that have likelier chances to end up being commodities as well. And to me, this choice has always been that if you don't have the necessary requirements of decentralizations, I'm not going to invest, or at least either way, that's going to be a speculative, meaning that this will be like the gray stuff, okay? If you are decentralized enough to me, you are decentralized enough to be overweighted because I'm going to consider you to be a commodity. So what happened throughout the latest 48 hours and this shitstorm of SEC is that actually one of my theses has been put into question. Actually, two of them, but we'll see. The thing is that my thesis has been put into dangerous potential invalidation for Atom, Chainlink, and Theta. For that very reason, because despite the fact that Theta hasn't been questioned, and that Chainlink either on the SEC's complaints, they've been taking the beat as well. So to me, that's the question of, are they just going to come next or whatever? Or is my investment thesis of showing them as being necessary commodities with different types of use cases? Remember, that's also on the table aforementioned. To me, Atom is a money multiplier. That's a replication of a banking system in the decentralized way. That's kind of a decentralized bank in the future, going to tend toward being a decentralized bank. And I'm actually working in the Cosmos ecosystem in that front to let these people understand which role they will have in the entire ecosystem in the future. And of course, this is nothing but a model. I could be wrong, and future will tell. But until then, what has potentially been proven wrong is my assumption that Atom was sufficiently decentralized to be deemed to be a commodity, and therefore, who gives a fuck about the SEC's complaint? And whatever happened is that, yeah, for whatever reason, Mr. Gensler and his folks at the SEC who's been publishing these complaints seems to believe the opposite way around. To say, no, this thing is way too centralized. This is a security, and it has sold unregistered security. Okay, though, like I said, one of us is wrong. Either the SEC is right or I am right, and this thing doesn't comply with the SEC because it doesn't have to, because it's not a security. It's a commodity because it's sufficiently decentralized to pass that threshold. I've always made that claim. There is the SEC's vision of stuff, and there are a hell of a lot of people inside the SEC who dissent with what's been said and done recently at the SEC. But there are powerful forces backing those claims as well, okay? The FATFs, the World Economic Forum, they are very powerful, unelected individuals who do everything they can to combat cryptocurrency. Therefore, they're really well supportive of actual SEC's actions recently. But we'll see all about that. There are some dissenting forces as well, inside the government as well, where there's quite a lot of people who are now fighting against this crypto cabal. And, well, I think in the end, there is no way we can escape a more reasonable resolution, which means a more intermediate approach with a clear-sighted decisions and separation between what is a commodity and what is a security. And of course, that doesn't mean the SEC's actions have been in vain. It just means to me the SEC is far outreaching its actual thing. It's consistently saying everything is a security until you prove it wrong. Yeah, I think it's about time to define the rules that would prove you wrong, to say this isn't a security because it is a commodity. That means every commodity could be a security as well, but some will be under the allegiance of the CFTC, which will be in charge of maintaining the oversight over this project and to make sure that they are sufficiently decentralized to claim being a commodity over time. And these projects will have to maintain this relative level of decentralization to be under the CFTC's rule, which will just be doing regular checks on decentralized metrics. And if you fail to maintain, or if you fail to pass them in the first place, you will be under the SEC's era. And the SEC isn't there to kill you. It's just here to make sure you're going to have enough due diligence over your investors, meaning you're going to be forced to publish multiple reports, financial reports on use of proceeds, what do you do with the money, and all of these things, because once again, regular securities do it on a regular basis. So how the heck could we imagine crypto won't be following the same rules? When you are centralized enough to be identified as a kind of a general enterprise, normal enterprise, then how would you have different requirements towards your investors if you're trying to sell a token? To me, this, in that sense, I'm fully supportive of the SEC as a regulatory body. But right now, what we have isn't that. What we have is a cabal who is trying to destroy what it can control, which is very dangerous because, like we stated, the commodities in question, the Ethereum, the atoms, and the like, the actual end game that they're trying to pursue is just giving us freedom, which is very, very dangerous. We're like actually fighting for freedom now. And that's why I think this is very, very crucial time for crypto to change course, because what happened in the latest 48 hours is very worrisome to me. All right, not just from my personal level investment thesis, which we're going to discuss without detours, but I think on a general human scale freedom level, there's very dangerous stuff happening right now. Okay, Go back to the investment thesis. All right. So if you go by Ethereum, like we stated, the role is to have Ethereum overperforming Bitcoin, because if it underperforms Bitcoin, then that means you probably should either accumulate money to buy at a cheaper discount, or you should rather like to accumulate on your Bitcoin. Okay. That's really the way it is. So we look at Ethereum Bitcoin. Well, to me, is the Ethereum thesis a bad one? Well, absolutely not. As you can see, it's just being absolutely hammered because, of course, SEC is trying to define a limit. They can't reach out to Bitcoin. It's already a commodity. So they're just going to try reaching out whatever they can. The next in line would be to fooling Ethereum's investors and saying, yeah, you're a security as well. Okay, so like we stated, try, but really, really honestly, Ethereum can hardly be described as a centralized stuff. It's really, really, really way more decentralized than the average other project. So the question is, where do we draw the line? All right? This will come into force. The thesis right now seems to be the market believes Ethereum will be a commodity. It's just pending. So right now there is a bit of uncertainty. So there could be a bit of volatility in this area, but the market tends to believe Ethereum is a decentralized system, sufficiently enough to be called a commodity as well. And if it is such a thing, then as you can see, the overall direction is still bullish. So it is expected to overperform Bitcoin, for the reasons that we've mentioned before. Like we stated, remember, Bitcoin is a store of value, but Ethereum is a debt collateral. So which means when the overall ecosystem is in a growth phase, normally the growth performers, which Ethereum will be, should provide better returns than a Bitcoin. So for now, this thesis is still ongoing. As you can see, we haven't changed course since 2019, in which Ethereum entered overperformance over Bitcoin. Question is, what's going to be the nature of the next cycle? Is it going to be bullish as well? Everything tends to suggest it is. We've got impulsion, flat consolidation, with now a compression, which is going on. We're waiting for the outcome of that compression to justify whether this investment thesis was right or wrong. Until then, this is therefore a time-based series investment, which means it's related to the first third of 2024 kind of era, in which, to me, if we're still trading inside that triangle, I will let myself decide with the outcome. If the outcome is down, then that means I'm going to go back to a more Bitcoin-centric type of investment thesis, awaiting for more favorable wins. If we go by to the upside, which I am currently favoring due to the 40% exposition I have in my portfolio in Ethereum, I think we're going to go by to the upside. And only time will prove me right or wrong, and prices. For now, the decision is not to be made yet. And I still give myself enough time until first quarter of 2024 due to the time series based investment. If Ethereum, for whatever reason, wasn't still considered a commodity by that time, it will be potentially under risks of being dismantled or SEC regulated or whatever. Okay, so I give it a time scale according to my time series model, which is letting me up to half of 2024, and I will decide by then, only if we're still trading inside that triangle or below. Okay, remember that even if we were trying to break down this area, I wouldn't validate my thesis until mid-2024. Okay, that's really the way it is. Ethereum could underperform Bitcoin for several weeks, months, I don't care. To me, the longer term duration, based on my time series, this is where we should go. We couldn't go lower before, and I don't care. I'm not going to adjust the portfolio, okay? So that's really the way it is. I'm not making short-term adjustments on investments. Remember that everything that happens in the short term on an investment thesis over multiple years is noise to me. Of course, this is noise that I could profit from. If I was better on arbitraging in and out, I could eventually multiply my gains, but that's unnecessary risk-taking to me. Like I said, my Ethereums, they're safely in a validator. I don't want to put them in and out each and every day. I want to participate in the network, and that's really the way it is, okay? I'm assuming that potential volatile risks, I don't want to profit from it because I really want to use the coins for what their initial purpose is to me, is to participate in the networks. Of course, Bitcoin has no participation, so Bitcoin is in a safely stored key at the bank, and I'm not willing to buy or sell each and every day. I just don't want to go use that key anytime soon. That's really the way it is. All right. So that's for the investment thesis about Bitcoin and Ethereum. Then comes the big question about Atom. You know, for those who've been following this channel for a long time, that I have a particular attraction toward the Cosmos ecosystem. It isn't something new. It's actually when I discovered the strength of that ecosystem, and it's been pretty much now 2.5 years into this ecosystem for me. And the longer time I've spent into this ecosystem, the deeper I went into it, to the point that some people actually even started to criticize and questioning my bias, and to say, yeah, Phil is biased. It's just too much into Cosmos because he's spending too much time in it, and it isn't clear-sighted anymore. It's just basically spreading nonsense about Cosmos. So like I've always said, I think I'm smart enough to know the difference between the two, and the time that I spend into Cosmos doesn't necessarily reflect into the money that I put into Cosmos. There are sure some overweights, but I'd like to set things real straight. There has been some mistakes made by my investment thesis on Cosmos, and I've gone very public with that. The actual moment in which happened, it was that, because back then I had some speculative trades on top of the investments. Remember, these are two different things. These were margin trades with stop losses, and I'd done a very critical mistake back then, is that I took away the trades that I had in margin, which were unprofitable or less profitable, because there was dilution of the token supply with staking rewards and inflation. I said, yeah, maybe looking at the duration of these trades, I might just pull out those tokens and put them into staking. The fact is, staking also comes along with 21 days and bonding periods, and the problem is when the invalidation, which means when I should have unwinded those trades. I'm sorry. All right, sorry, long call. Where were we? So in that sense, basically, I think that the motive in here is to understand that the thesis could be proven wrong. As you can see on the chart, I had clear level of invalidation in here, which aren't associated with stop losses due to the fact that this is a time series based investment. I'm going to choose whatever I'm going to be doing with that part of investment by the mid-2024. And moreover, remember that all of those that I have in black are ones that I will have a portion of that investment that will be never sold. That means I have time series investment on the longer time scale, which is terminating by 2030, which means some of my atoms, some of my Ethereum, some of my Bitcoin, some of my chain links, Monero, not necessarily Theta. I mean, now this one is going to go back to that. I'll explain why. These ones are ones that I will never sell some of it, okay? That I'm willing to go down to the end of it and lose it all if that comes to it. Of course, that ready to lose it all is a marginable portion of the portfolio, all right? This is money that I'm willing to lose, and I'm not going to die if I lose it. That's really the way it is, all right? These are investment in the thesis, in the technology, and I think we need those assets. Okay, just not necessarily as an investor in here. I think as a human, we need these technology to face the forthcoming years. Same story in here, not just a bias, just because I follow the goddamn guidelines that I have, which are not perfect, they're just models, but here they are. Okay, remember that the next cycle, okay, is going to be an authoritarian cycle. That's the reason why I think we need decentralized technology to have at least legitimate forces to fight against that authoritarian regimes. That probably awaits us for the forthcoming years. So the reason why some assets have an investment toward the next cycle, which is peaking at 2032, okay, those significant years ahead, though therefore there are high chances, well, things can go so many different ways. Though this is a marginal portion of my portfolio that is in that bucket, it's including Bitcoin, of course, but a portion of my ETH, Atom, Chainlinks, and Monero, I think, are required to fight against the authoritarian regimes that eventually awaits us in the next consolidative cycle. So that's the reason for my thesis, okay? Though, like I stated, all of these assets have to be commodities. If they are not, then they're probably under risks of being either regulated or just destroyed by centralized powers, either today or back then. And the reason why, therefore, I'm really concerned about the recent 48 hours is that some of these assets that I had into my thesis have been either included in this SEC's complaint, stated as being securities, which they all are, by the way. Remember, yes, Atom is a security, Ethereum is a security, Chainlink is a security, but that doesn't mean the SEC has legislation to regulate them. I think the CFTC does, because they are not just securities, they are also commodities. Okay, remember that you can be both a security and a commodity, but the thing is that as long as you are a commodity, the SEC doesn't have jurisdictions over your project. You don't necessarily have to have that level of regulatory oversight. You still need to have regulatory oversight on how decentralized you are to be sufficiently enough to be considered a commodity. Remember, commodity is a common good stuff. That means it must not be in the hands of a few, otherwise that's nothing but a security only, all right? So remember that thing. I think that's the #1 topic that could be proven wrong with the recent actions. If I end up being proven wrong, and if for whatever reason Atom ended up really being called a security and regulated as such, and it was enough to kill the project, and to have to slow it down into its decentralization process, because that's the key element that I would like to insist on. This isn't something static, okay? Remember that there are constant forces of centralization that are threatening each and every project. And I think this is the job of the CFTC, to make sure that the decentralization forces fighting against those centralization forces are sufficient enough to pass the threshold of being called a commodity. And of course, if you fail, you're back down to security, which means you're going to have to provide clarity on the use of proceeds and stuff like that for investors to have at least a legitimate basis for investing. All right? And that is something I totally understand. And I think anyway, that's the end game for the regulatory framework. There's no way we get out of this without this structure. The problem is that currently it doesn't seem to be that way. At the current time, what we have is just a very aggressive SEC striking forces everywhere, and the CFTC having absolutely no clarity to regulate duly. So I don't think this is something that will last, and that's the reason why, to me, what's happening here is concerning. You could be proving me wrong, but not necessarily yet. Remember that time is essential on time series bet investment, because there can be a hell of a lot of noise out of external catalysts. But what I could say in here is that this isn't just noise. This is concerning to the point that I think now opposite forces will be required to restore neutrality and potentiality on this scenario. The thing is that what worries me the most is that I've always tended to measure probabilities out of potential risks and reward ratios. Now what I would mention is that if I am wrong, yes, I've always made it clear Atom will go down to these prices, which means at least going down into the context. And there would still be, at that point, the potential to another 25% drawdown. But on the other hand, in order to succeed, and reverse course, it would be a double in the price. So like I would say, the fact that we're going down is increasing the reward if I end up being right. But it also means the probabilities are slightly narrow as well. That means what the SEC has done is reducing the probability of such thing happening, because it shifted the cursor in the other direction. Though the thing is that now I think we require external forces to fight severely against these SEC claims. I don't know what that is. That could be internal forces in the SEC claiming that this isn't legitimate enough, that this is outside of the SEC's jurisdictions to attack on some project. And I don't think Atom is the only one here. I think Cardano as well is sufficiently decentralized to be called a commodity. And I think many others would eventually follow suit, like Chainlink and stuff like that. Of course, don't expect the US government to consider money or security. I mean, this is like privacy technology, and the government doesn't seem to appreciate that now. I mean, remember, normally privacy is a guarantee in the Constitution, but I mean, we live in troubled times now. So once again, the other four in here are the ones that I have chosen to be the most legitimate ones that I care about to be deemed commodities. If I end up being proven wrong, well, some of them will have to go back to the more light gray version, which means I'm going to have to invalidate their perspective. That will only be done by the end of 2024. All right. And for those that have engaged as being black, I'm not going to reverse course. I have chosen to reverse course on Theta for the only reason that Theta has made new lows, which wasn't part of my plan. And to me, the entire speculative sequence that I was using with third range boundary alignments and stuff, I'm going to go down to, have been invalidated. There's new low. I disagree with that. I never thought it would happen, but yet it is. So it's invalidating my overall thesis, my overall technical thesis. So now I think Theta can hardly go where I expected it to go. So I'm therefore considering a total invalidation by mid-2024. I'm still in. Remember, those I have in gray are those that I'm going to hold till 2024. The black ones are the ones that I will hold a portion of beyond 2024, even if 2024 ended up being an invalidation to me. But remember, until then, the gray ones are the ones I will hold no matter fucking what until 2024. And I'll judge by that time. The only thing that I do with that portfolio is reweighting, which means if for whatever reason one asset goes very underweighted relative to the shares that I want to allocate into, I would eventually consider switching. That's what I've done a few days ago when I switched some Ethereum into Atom, because Ethereum severely overperformed my Atom portfolio, and that's it. I just reweighted the portfolio to pull it right back down to its native states. That's the state that I've always been into, actually, because if you've seen me for quite some time, you've seen that 40% Ethereum, 20% Atom, 10 to 10% Bitcoin was my native level, and now we're at the top of it, 15%, which means the next time around, if for whatever reason Ethereum and Atom were to be destroyed even further and Bitcoin was to strengthen further, I would eventually consider start switching some of the bought Bitcoin into Atom and Ethereum. Because to me, over 15% Bitcoin is over my market cap roof level. That's my ceiling level for Bitcoin. So of course, if it goes 15.5%, I'm not going to necessarily act. But if it goes 16, 17, 18, I'm going to start considering lowering Bitcoin exposition to strengthen the other ones. Okay, so that's really the way it is. I'm maintaining relative shares on the portfolio, accounting to the thesis that I have, which scenario will end around first third of 2024, and I'm not going to change anything. Am I very concerned with the recent action of the SEC? Yes, and I am therefore particularly concerned on a couple of assets. It has been sufficient enough to change my thesis on Theta, which I recently switched to a long-term investment, and now is no longer the case. I'm back into 2024, and I'll eventually consider switching it all away in 2024. It's still not the case for Atom, but could be. Okay, the reality is that I'll judge by mid-2024 if I will eventually keep going with my full thesis on Atom, which means some of the investment could be taken profits or losses in mid-24, but a portion of it will inevitably extend it longer for the reasons explained before, or not. That's the next question that I have to follow through. For Theta, it's been invalidated. Next question is it going to be the same thing for the Chainlink and for Atom or not? What am I going to use to decide that? Well, like I said, there is a time-based decision, which means anyhow and anyway, the answer will have to be given by half of 2024, no matter what. I can't push that answer further down the line to unlimited. Like, I can't just kick the can down the road, all right? Though there is a time-limited offer for early 2024 to decide. I think if Atom is still trading in the nearby prices, I'll eventually consider unwinding down this offer, depending on multiple factors. I depend on the regulatory framework which we're in by that time. If for whatever reason it's still considered a security, it's still trading sideways, or even if, to me, if it goes there, that's going to be an invalidation sign. If it makes new low, I'm going to be saying, okay, Atom has very limited chances to succeed. I'm not going to sell here, like I said. That's just going to be, to me, that in order to invalidate the bear thesis, it would require 4x, which to me is the same old story. The higher the gains, the lesser the probability of this to happen. Why don't I want to see Atom trading at $4? Because in order to restore price stability out of this, to restore neutrality, it will require to 4x, which is very, very limited chances to happen. So the reason why I was very confident in Atom, more than I was in Sol and AVAX and all the others, is because all of these, in order to even restore price stability, required quite a significant price multiplier. Atom wasn't in that case because it hasn't been crazily fucking overbought on the previous cycle. And to me, that was a very advantageous situation. It gave many more probable situations for Atom to succeed. What happened during the latest 48 hours is that maybe that thesis wasn't right. And I don't know the answer yet. What's going to help me deciding whether or not it is two things. If we stay there for long enough that half of 2024 was to trading in that area and Atom is still considered a security and there's still no regulatory framework that explain it otherwise in the UN, in the United States and or elsewhere, because I don't mind if the regulatory shit is still happening in the US, if we finally have regulatory clarity and a welcoming framework in the other part of the world sufficient enough for adoption, well, I would still be favorable for this. But the thing is that, yeah, by 2024, a lot of things will happen. We'll probably change president, and there's a very limited chance that there will not be crypto discussions in between the process of the election. So to be honest, I think the chances for us to be in such a negative framework in April 2024 are close to zero. And I will let the market the chance to prove me wrong. Like I said, for some of my investment thesis, even if that would end up being proven wrong, some of my items will still be in the portfolio no matter what. I'm willing to put this one down to zero. But for a portion of the portfolio, that would potentially be an invalidation. With gains, loss, I don't care. But if half 2024, we're still in that mess, I would consider taking some money off the table. Yes, until then, not a chance. You can try hard, folks, but we'll see all about that. You can try knocking me down on cryptos. Like I said, I'm not using leverage. You can't make me sell my coins. There's nothing you can do. I have full custody of those tokens, and I wish you guys are as well. If you've invested into crypto, now is not the time to have it in exchange. It's a time to have it self-custody and to participate in those networks now more than ever. The reason why some of them are in black is not just because I like them. It's because I think we need them. I think the humanity needs that technology, and we're probably going to figure it out by 2025 to 2028. If we enter that authoritarian cycle as expected to happen, you're going to be very happy that crypto exists. That's my thesis all along. That's the reason I have some blacks. Some of these, Atom, Chainlink, might eventually reverse to gray, And I would make that decision by mid-2024 if for whatever reason I was wrong. And if some other point out as more viable candidate to take these spots, I will eventually consider switching my black spots for new ones. But for now, like I said, it's a thesis of centralizations against decentralization. And I think there's always been one factor among all of those to prove the relative necessary level of decentralization to be deemed to be a commodity. It's time-based. Every project starts centralized and decentralized over time. So time is a constant. It is a variable in here. The longer you've existed, the more decentralized you could be. Therefore, the longer the projects have existed, the better they are for me. Cosmos has been around since 2014. That's hell of a freakingly long-term project. It's not been launched through the previous cycle and pumped by VC and speculative capital. It hasn't been the case. That's the reason why I think Atom is one of the best positioned to succeed. So my thesis would change eventually. I've given you all the details. If I get to have quarterly closes inside the support context, that would be the sign that my thesis is wrong. And therefore, if this happens, I will consider switching Atom back to gray, to light gray, which means I could eventually consider an entire exit by 2024. Until then, my thesis is, fuck it, guys. I don't see it happening. I think the SEC is on a rampage, and I think some other forces will start fighting against it. Crypto hasn't answered yet, but the allegations of the SEC, some of them are true, most of them are full of shit, and to be honest, I think this won't remain unbattled. I think now is the time the battle starts. I think that's the time crypto will start to fight back, and I'm very curious to see what's going to happen within the next few weeks. But like I stated in the intro, no matter what, prices will be the answer to me. I'm going to care a lot about the close by the end of June. That's going to be it. If a close is inside the context, meaning for Cosmos below 6.4%, you will see me turning that black into dark, into shade gray, into light gray. And that doesn't mean I'm going to reverse it. I will be unable to reverse that action later, but I'm going to need severe change of direction to do such a thing. Okay, so that's really the way it is. If we go there, I'm going to switch it back to light gray, which means I'm considering eventually exiting it all by the mid-2024. But if for whatever reason we do this to just do that afterwards, well, you can be damn sure that whenever we break that trend line, I'm going to pull it right back down to gray, to dark. That's really the way it is, all right? So I'm going to adjust to the market. The prices will lead me into that direction. I think the prices right now are telling the future like we know what it's going to be. I would like to see if opposite forces are there to fight back. I think they will be there. I think Atom has a legitimate decentralization to fight against the SEC. We'll see all about that. I doubt it will be the only one to do such a thing. But that's an interesting time we live in. The current time right now, the latest 48 hours are really troubling to me. On a human and tradable level, I really haven't had a pleasant time. But on an investment perspective, this doesn't change anything. It's been triggering some potential invalidation, and I'm starting to raise some legitimate questions, because there's no such a thing as certainty in investment either. But that's all of it, and that's what I wanted to share today. All right? So that's the way it is. You know my investment in the Cosmos, and it goes beyond just financial investment. I am invested personally as well. I'm running a validator with some folks in here in Cosmos. We're having some implications beyond capital. I do invest a lot of time in Cosmos, advisor and some sort and some things like that. Most of the time I do it for free. So yes, I do have a personal engagement with Cosmos. But if you are among those who think that it's blurring my decisions on an investment thesis and on a speculative portfolio as well, well, you got it wrong. I haven't made some special case for Atom. I treated this one because technically speaking, it has the best risk-reward ratios back then. Has it been a good choice? No, it wasn't. It's been stopped out, meaning a loss. But as you can see, the rest of the market is shattered as well. So there was no safe place. That's really the way it is. I still have some speculative trades going on now on Ethereum, Chainlink, and if they end up being taken down as well, I'll let them happen. I know trading is part of taking gains and losses, all right? So I had no bias on trading. I've made choices. I've figured out the best ones to go for, and ended up some of them not being right. We'll see if the other ones are or are not as well. Future will only tell. I'll have stop losses on those trades, and only prices can decide. On the other hand, well, like I said, on an investment thesis, I think there are questionable things that have been happening. They may question some of my thesis, and I will carefully look forward for the next monthly close, and as well for the time series early next 2024 to decide what to do with the investment thesis. Until then, well, good luck to the SEC. You've struck quite a lot of bullets recently. Some have hit very hard. The thing is that, well, the opposite camp does have some bullets as well. I'm waiting to see them striking, and I would like to see how the SEC is going to defend. But like I said, if you think you know the future, I don't think you really, really do. Bye, guys.